Good afternoon, everyone. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please go ahead and type the number 1 in the chat box to let me know that you can. I would greatly appreciate it. Afternoon, Brenda. Yep, Jim, we'll get camera on in a moment. Always get the audio going first. Make sure everybody can hear me. I appreciate it, though, the reminder. Hey, Helen, good morning. Lots of ones. Thanks, Andrew. Hey, Alex. Morning. Hey, Ed, welcome. Lot going by fast, guys. Sorry. Afternoon, Kevin. Yeah, one, Patty. O-N-E, right? Hey, Stephanie, good afternoon. All right, everybody. Well, as we get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right. So we got an agenda for the day. We're going to go through our follow us page. Then we get into today's trades, which means get your trades ready, folks. This isn't just about me. This is about what you're doing for multiple reasons. You're putting it out there to the universe. You're helping others that are new here see that it is possible to do something positive in trading, to find some winning trades, even in these crazy market times. We'll go through the economic reports. We'll look at a review of the market, upcoming trainings. We'll go over our weekly topic, and then we'll look at and finalize everything, wrap it up with your candidates of the day. So same scenario. I don't have to look at the candidates. I know what I want to look at. What do you want me to look at? What do you want one last set of eyes on before you make that decision of, is it really the right place to draw the fib? Is this one good bouncing off support? I think it's going up. What should I do? And the likes. All right, here is our follow us page. So we put content out day in and day out. We've got a full-time team that their only job is to get content out. They take bigger videos and trainings that we do and break them apart into little reels, and they go on LinkedIn. They go all over the place. We just shot 3 YouTube videos on Thursday in our office, Sean and I, along with another 20 TikToks that we did in there also. So you'll find a lot of great content out there. I don't care which one you follow. You don't need to follow them all, but make sure you are following along to try to keep up with what we put out there regularly. Keeping in mind, too, that places like Facebook, most of the time when someone is following you, they don't show what you put up there. So you've got to physically go look for it. All right, today's trades. What trades did you all do? Drop them in. I will share with you what I've done. I will show you what's going on or what I've done recently and how some of those results have been. Let's see. So Trip said AMD scalp for 30.4% ROR in 9 minutes. Great job, Trip. My guess is that is one of the Hakanashi scalp trades inside of Inner Circle. So that's fantastic. I love it. Absolutely love it. And I know it catches you guys off guard a little bit. But again, accountability. That's what this is about. Put it out there. These are the trades that I'm doing. Win, lose, or draw, doesn't matter. Funded, non-funded, doesn't matter. It may not have been today. It may have been Thursday or Friday you did the trade. That's okay. You don't have to trade every day. I don't. Right? Yeah, go Trip. There you go. No trades for Alex, for Jim rather today. Alex had caught pop on Broadcom earlier, but it just hopped back and forth about $1 across the fib line so far. Alex says, I don't want to brag, but a couple of my trades have briefly shown double-digit profits so far today. These market makers jerking prices around are the bane of my existence. I get you, Alex, and it is definitely an issue. It is definitely an issue, right? The way market makers adjust and manipulate pricing can be tough, right? And especially in these market conditions. Yes, don't get me wrong. What do we got going on here? If you look at just VIX for a moment, right? VIX is down. We're back in regular and normal, right? It's just life is good. Nothing to really worry about, right? The price of options are fair. They're not underpriced, but they're not overpriced. Let me rephrase. It shouldn't be overpriced. But market makers are still keeping vols up. They're still keeping bid-ask spreads wider, even with this, because they're afraid that some political figure is going to come out and say, ooh, tariffs. They're going to say the word tariffs. Oops, sorry about that, banging into the mic. They're going to say the word tariffs again, whether it's China saying it or the U.S. saying it or Europe saying it or whomever, and if we're going to send the market into a tizzy all over again. So they're, to protect themselves, market makers are playing with pricing a little bit right now. So not unsurprising. There you go. Patty said MasterCard and Lilly one contract each, not much, but $55 in total. We will take it, Patty, right? It's better than the other choice of money going against you. So I'll take it. Don said Caterpillar up about $200. I love it. Great job. Good. So guys, the only one for me was Lilly, right? And it is still in the position right now, right? Haven't gotten out of it. Should have, but have not. If we look at what happened, right? Here's Lilly today, right? Lilly gap down. Why is that important? Well, this is the fib line. Where did we close? This is our final 5-minute candle. We closed here. If we go back to the daily, we closed, right here. We gapped down and pulled all the way back to the fib. I had a confluence of the 21. And then what it really comes down to is patience. I'm going to take that off the screen so I can set this up. I don't want you to see what I'm going to do. I don't want you to be prejudged. Come on. Why is it? Oh, that's why it's up there. Come on. I'll do it on this other monitor. I have too much Zoom stuff open here with chat boxes and participants that I can't really get anything moving over there. So all right. So now I'll bring it back over. And it's just me setting the chart up. That's all. This is a 5-minute chart. This is last week. You can see 5-2. 5-2 was Friday, right there, right? 5-2. 1600, end of day, 4 o'clock. Okay. So what happens? Right now, hopefully it doesn't change. I liked where Lilly closed on Friday. Today, good. It didn't change. Today, I want to see what happens when we open up. So right now, if I did not look at pre-market data, I'd be in position number 2 in the chair. What are the positions? Position number 1 is all the way back here. Can't reach the keyboard, right? Position 2, sitting up, paying attention to what's happening. Position 3, lean forward, placing the trade, right? I'd be in position 1, right? If nothing was going on, but we closed near a fib line and we had a confluence. So we got a rank of 1. So I'm sitting straight up in my chair. The first candle of the day comes out right there, and I automatically go back to position 1 because there's absolutely nothing that I can do there. Now, I knew that from pre-market data that it was expected. You can see there was a lot of movement on the candle, certainly a lot of uncertainty. Did I miss out on the trade? Is it going to continue to push down from here? It's very possible. It's very possible I miss it. I miss them all the time. And I am okay with that because I am not the master of every single trade that possibly happens every single day. I'll never will be. Never will be. Period. Right? So position number 1 in the chair, sitting back here. Next candle, we move up. I'm still in position 1. Hands behind my head. There's nothing to do right now. I am waiting. What is there? We go up. I'm waiting. All right, we're sideways. I'm kind of in a position number 2-ish right now, 1.5, maybe. One hand behind my head, maybe. I don't know. But I'm not really ready to place a trade yet, but I am paying more attention. Once again, did I run up now? And then this is where my technical skills come in of my experience. And that's all this is my experience talking now, right? So what do I see? I see we had a high, a little bit of a lower high, about the same high, a lower high. Did we put in a lower high now? So we're getting a little bit of a downward trend in there. It's not much, but it's all happening in reference to the fib line, every bit of it, okay? So I'm watching very intently, paying attention to what's happening there. We go another candle. Got to activate the chart. We go another candle. We start backing off. I'm back in position 1. I really wanted it closer to the fib line. Didn't quite get to where I was hoping for. We'll come here. Same thing, position 1 in the chair. All right, now I go from position 1 to position 2. What just happened? I am much closer now to that fib line. I closed at 825.38, and that fib line is 825.38. That fib line is 828.25. So 25, we're about $3 off from it. Still too far away, but we're about $3 off, right? Next candle comes. All right, what's happening now? This pattern that we see right now happening. We had a really big candle and we get a small, what I call an edge candle. We just move up a little bit. We just edge up a little bit in there, right? What's happening? The bulls are pushing up. We had a slightly higher high, a slightly higher close. Bullish overall. You can start checking volume if you want. I'm not going to change screen right now because I want to keep it on this view. But you could check volume to see what's happening in volume if you chose. Right? We're going to go another candle. All right, we're backing off. We're still a little too far away at this point. We're backing off a little bit. So I'm in that position 1.5-ish. I'm paying very close attention, sort of. Right? We move up a little higher. Okay, nice. We didn't beat the high yet, but we're closing about where we did on the previous candle. And you can measure exact if you want. I don't have that kind of time in my life. I've got to make this visual and as quick as possible. If I have to start measuring everything and thinking about all these different things and to try to be perfect is what I'm getting at. By the time you place the trade will be missed. Trade's over already. By the time you already hit enter. We go another candle. We're going to say day. These are 5-minute candles. We go another candle. Same thing. So now we're in a little dreaded box of neutrality. We may float around here for a little bit. We may never get back up to resistance. I don't know. Right? Oh, and right there, boom. So I was in position number 2-1-2-ish in this right here. And I am in position number 1 in the 3 in the chair right now. I am lean forward, hands on keyboard, ready to rock and roll. What does that mean? Right? I need the market rolling over. Look where we closed. Right? We said that we're right now at 827.5, we'll call it. The fib line was 828.25, so we're about 70 cents away. And we did stretch up into the line. I'm okay with that. So now I am set. My order is in place. I chose the option. I'm ready to trade, and I'm going to hit enter. Right? Boom. We gap down. We run. I'm going to get in this about $1 or so, $1.50 so below that level. That's the entry. Folks, it is as hard and as easy as that. Right? Patience. I say it all the time. My kids hate the statement. When the word patience comes out of my mouth, their eyes roll in their head because they know the next word is grasshopper. Patience, grasshopper. Right? And yes, my kids were very much the mentees to me. I took it as my job was their mentor and to teach them things, and I taught by examples. Just as I do here, I use a lot of verbal or visual explanations, right? And we roll over from here, we pop back up. Oh my God, there are traders literally pulling out of the trade right now because of what it did right there. And they're running for the hills instead of saying, okay, hold on and be where we're at, okay? So overall, not a bad setup. We're into lunchtime now, so it's a little bit of a slowdown. Again, I should have pulled out of the trade already as we got into this. Did not. Nothing I can do at this point, right? But let me ask, give me a 1 for yes, a 2 for no. Was that helpful? The way I just walked through this, was that helpful for you? Was that something worth it that if I see more of those, I could spend the time and go through it with you? Hey, Andres, very good, for sure. A lot of ones. Great. I appreciate it. Always appreciate the ones. Hey, Roman. Yes, Brenda, it was puts. Correct. All right, let's see. Lots more messages there. Jim said, Lily, third candle of the day, 1 bullish, 3 bearish, 1 bullish. Looked like a sloppy rising 3. Yeah, you're talking about from the very start of the day, Jim? To me, and I'm not saying that you're not seeing this, Jim. I'm just using this as an example, okay? But here's where I see a lot of traders misstep. And it took a long time, even for those that have been following me for a while, for some traders to really start to get this in their brain, and it became second nature. And what I mean by that is this. If we go back to a daily chart, everything I need to know about what's happening intraday is on this chart. It's on the daily chart. And I'm talking about before the day started. I'm not talking about with today's candle on there. I'm talking about take today's candle off. We close with a rank of 1 at a neutral bias, right? But very close to bearish. Very close to a bearish bias in there. The S&P was down a little bit today, right? My candle's off there. The S&P was down a little bit today. Hollow candle, but lower than yesterday's close. Right? So we go back to Lily over here. So right now, and I'll just put it back where it was. What do I need to see on here? I need fib lines. I need moving average levels. Snap a line at 840.86 on your chart. Make the line pink, magenta, whatever color, flavor, whatever you want to call it. I don't really care. Whatever your 8 moving average is, make it that color. So you know what it represents when you're looking at that chart. Horizontal line. Right? That's your hard line. This fib line, the 764, hard line. Okay? The 21, hard line. Snap those on there. Right? Once I have that and I know that, now I don't have the moving averages on here snapped on the intraday charts, on Omega charts. I do on TradeStation, but not on Omega charts. but I have the fib line in there. I can watch that level and I know what I'm looking for in there. I'm looking for that weakness in there. So take what's on your daily, transpose it onto your intraday, whatever time frame that is. If you're trading off a 2-minute, a 5-minute, a 15-minute, whatever it is, it doesn't matter. Transpose the daily key levels onto your intraday chart. Because even if you look at this and say, well, it really has no importance, that level to me right now, because it's intraday. So, I mean, it's end of day. So do I care? Well, I don't know. Did you care here and here and here? And then, of course, today here, yes. If we move back up again, are we going to care up here? Yes. Yes. Those key levels are important. Right now, we've got other fib lines that are way down there, right? 100-point level, that's way down there, and that's fine. But you need to transfer over whatever is close and use those levels to help you in your trade decision. Jim said, third candle started rising 3 pattern, supporting your approach to the fib line to make an entry. Oh, I got you, Jim. Yeah. Yeah. So, I mean, we've got these 3 big candles. You got this pullback, this bounce, slightly higher highs. Everything I want to see is happening in there, right? Close near, and then we failed on that next candle. Could you have taken the trade there? Yes, absolutely. If you missed it and it closed here and it started to roll over there, oh man, that was a no-brainer. If you missed it there, I'm sorry, there, on the first hollow candle, that closed there, you should have been on the edge of your chair where it's very possible your chair is going to crack, break, or you're going to fall out of it because you're that much on the edge of the chair ready to place that trade. That's how tight it is, okay? Excellent, good, all right. I feel like I taught an entire class. Got the fan on. I'm just trying to look what do we got temperature-wise. Yeah, it's a little bit warm today in here. All right, so guys, here's a trade with Rob. And again, if you're not a subscriber to this, guys, this is free. I do it as often as I can each week. Usually it's 2 or 3 times a week. Last week I did it at least twice, but I think I did 3. No, I did 2 because there's only 4 days we can do it. I don't do them on Fridays. We do an SPX video on Friday for the upcoming week. So last week, the only trade that went off, actually, we didn't have anything last week. This was the week before. So I only did 2 days last week. None of them went off last week. But look at the trades in here, guys. One contract up 300, down 100, up 288, up 3,000. That was the best trade we've ever done in Trade with Rob, right? So free resource, take advantage of it, right? Here is power option plays. This is from the 29th and the 30th. You can see the dates listed right here. Entry and exit dates are all the same because these are all day trades, right? And you can see our P&Ls. We had 1, 2, 3, 4, 5, 6 trades, 1 break even, 5 went in our direction. Overall, doing extremely well. This was $3,000 on day trades. On our swing trade, our 10 contract trades, full contracts, that means it's over $30,000 for those 2 days, right? These volatile markets have been extremely beneficial to us, extremely beneficial, right? But you may look at this and say, Rob, CrowdStrike, yeah, it's too expensive for me. I'm not trading that one. UNH, too expensive. I'm not trading that one. Meta, I just don't like the guy, right? I don't like the guy, Mark. I'm not a fan of his. So I would have done maybe Lily's too expensive. Maybe MasterCard. But see what I'm going, guys? You could pick the ones that fit your risk and just trade those. You don't have to trade all of these. You should not be trading everything that's on pop. You should to learn it, but that's all that is. That's learning. Once you learn it, and then by me having you trade all 20 stocks on pop when they present themselves, you're learning to figure out which ones you like and which ones you don't like. You may look at AMD and go, man, AMD is inexpensive enough. I like it for that, but I don't like the way it moves. And I'm not saying it doesn't move well. I'm saying you may not like the movement on it and choose, you know what, that's just not for me. You may be a high flyer type guy or gal and say, man, I just want rocking and rolling. Give me a Costco any day of the week, right? I love trading them, or a booking, or the Lilies are the ones getting up near the $1,000 level now, right? Which there are plenty of. NVIDIA, which is over 1,000, depending on the day you're looking at it. Brenda said, so I've been watching the SPY dance off of the 0.882 at 565 and a quarter for a while now. Do I wait until it goes below the 565 or above it? Do you wait for what, Brenda? See, what are you trying to accomplish? Give me one more statement in there. What are you looking to do? So you're up at the 882, which did we need it in here? 54, 64, 74, 18. So I don't need the 882 in there, but so here's what we do. I don't need it in here as a fibit. So I put it in as a different color then. So I can put it in at what we would normally use for a Fibonacci 4-step and say that's really not there because I need a black line drawn there because I don't. All right. Well, entry for call or put. I guess the bottom line comes down to, so Brenda, ask yourself the question, first off, are you trading only in the direction of the S&P 500? If the answer is yes, then the S&P overall is bullish, so you probably want to wait for a bullish setup, which means get back above the 882 retest and bounce. If the market is in a complete tizzy and starts falling from here, is there anything wrong with taking the downside trade on it? The answer is no. It's just a matter of what you're trying to accomplish. It's not to me, I would much prefer right now, and I don't mean the second, but with where SPY is sitting, I'd rather take a bullish trade. If the market is falling apart, going to hell in a handbasket, crazy nutty at this point, and starts falling down, then and everything is dropping, I have no problem with a fail, a retest, and a drop, and taking a bearish trade for today only. Not a hold overnight, ever, ever, ever. Not when the market is overall bullish. Does that help, Brenda? Alex said, PSA for everyone, when you buy to close and buy to open and sell to close, be sure to check your initial credit cost against your closing debit for the actual number. On TOS, the actual P&L is usually lower, sometimes significantly lower than the red or green number showing. For example, you might buy to open at 3,000, exit with a $300 profit showing, but instead it debited 3,100, which is a final take-home profit. Yeah, I don't know what, I mean, I read it out for you, Alex. I don't know what that is doing or why, since I don't use it, but hopefully those of you that are on TOS get it. Gwen said, so when the daily chart says bullish and the lower time frame says bearish, which one do you trade? Yes. 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 Great question, Gwen. What goal are you trying to accomplish? First question answered, Gwen, is are you okay trading against the direction of the market? If the answer is no, then you've already answered that question, only taken in the direction of the higher time frame, which is the daily chart. Okay? So yes, you are. Okay. Then only trade in the direction of the S&P 500 if that's the case. Right? Now, if you are the person that says, I will take it in both directions, I will trade in both directions, up and down. Right? Me, as an example, I will trade. My preference is to trade in the direction of. But if we were closed right now, Gwen, this is a switchback trade. If the market opens to the downside tomorrow and this stock drops, retests, and fails, I'll take the bearish trade for the day. For the day. And I won't be in it that long. Normally, I'm not in it the entire day. I'm out of it 10:30, 11 o'clock, the latest, normally, where I get out of that trade. Right? But I will take that intraday move against the overall position. I'm okay with that. Right? But some of you may not be. And for brand new traders, you shouldn't be okay with that. Your only trade should be the direction of the S&P 500. If you look at the S&P and you decipher that the S&P is bullish, then you should be taking bullish trades at this point. Taking counter trend trades should be left from someone more experienced as a trader. And do not take that as a negative. Never, ever, ever take the things that I tell you as I'm taking away your toy and you can't play with it. Haha, this is mine now. You can't have it. No, that's not me. Right? Yeah, this is one of my little stress balls. That's not me. This is me telling you, right? This is a hot stove. And I'm telling you it's hot. You're an adult. You're not a baby. If you want to touch the hot stove, I'm okay with it. It's your money. It's your account. You do what you want. My job as a coach is to make sure you get it. Once you get it, I'm free and clear. I sleep like a baby at night. Sleep like a baby. Gwen said, no, I don't mind trading any direction. And that is what I do. Yeah. And so there you go, Gwen. So now it's a matter of what's happening right now, right? If the market is down and you see an opportunity to take SPY, since that's what we're looking at, to the downside, and you want to trade in that overall bearish direction, that's okay. If the market's going up and you choose to trade a bearish trade, if I took it as, here, let's do it this way. Least to most aggressive, right? SPX, and stock, same direction. Right? That would be the least aggressive of anything we could do. Right? SPX, and I'm just going to use this as an example, right? Up. Just as an example. It could be down. It doesn't matter. I'm just going to use this as up, right? Stock down. Right? This is more aggressive. Actually, no, let me do it this way. Not APX, SPX. I know what I want to say, I just can't write it out the way that I want to say it. If everything's moving in the same direction, it's the least aggressive. If you've got the market moving, let me say it out loud so I can maybe write it better. If you've got the overall market moving down and your stock is moving down, that is, okay, yeah. So if the SPX, the overall position is, okay, that's it. That's what's missing here. The SPX is up, but bearish. It's up bearish today. Maybe that'll do it. So the S&P 500 is moving up. The general direction is bullish. And today it's moving bearish. So today it's pulled back. And the stock is down. That's more aggressive than having everything in the same direction of what the S&P is. Let's stop there for a second. For this one here, the second one I put in there, SPX up, bearish today, as an example, stock down, that is more aggressive. Give me a 1 for yes, a 2 for no, if you understand what I'm talking about there. I know what I want to say, it's just, it's not coming out the way I want it to. It's nothing like live TV. I have friends of mine that are like, yo, I'm nuts. I would not be in front of people live doing stuff like this. I would have every answer written down and never get caught by somebody that I don't know how to answer what they say. Glenn said it's clear. Okay, good. So I'm getting all ones in here. All right, so that's good. All right, then I'm doing better at it than I thought, right? Right, and then the most aggressive would be SPX up today also. So what do I mean by that? What I mean is the S&P is at a bullish trend and it's up today. Stock is bearish, right? Most aggressive, right? Most aggressive. So if you take this little chart and work off of this and say, okay, which one of these is it? Now, we already use a rank of 1, 2, or 3 on our chart. Okay? If you wanted to add one more step and give it another ranking, I would give it a letter, ABC, right? I would call this one an A. Right? I would call this one a B. And I would call this one an F. No, we'll give it a C. Right? A C. So which trade do you want to do? The A is the safest. If you are a brand new trader, and when I say brand new, if you have not been successful in trading at all, meaning you're fairly new at this, you've only got a handful of trades under your belt, you should not be doing anything other than the A ones, right? In my opinion, it's still your money. You still decide what you should do. If you were my family member, if you were my cousin, my brother, my sister-in-law, and I'm sitting down with you and my own children, that's exactly what I would tell them. I would say, don't do anything but this. You make the decision of what you want to do from there, as my kids will as well, right? S&P is up, B, right? S&P is up, right? But it's bearish today, so it's pulled back a little bit. The stock is down. It's more aggressive, but I'm taking an intraday trade trying to capture the overall momentum of the market. But those in many cases are short-lived moves. So when it's falling and it stops, it starts to vacillate, bounce a little bit, it's time to go. What if it drops more? What if it doesn't? Right? You can't worry about the what ifs. You got to make a stance and say, that's it, I'm pulling the trigger, I'm done. Right? And you walk away. All right. And the S&P is up, but general direction, it's up, and it's up today, and your stock is bearish, right? That's more aggressive. But Rob, news drove it down today. I understand, and I'm not saying you're wrong, right? Just understand, because of the overall movement of the market, if something is keeping the market up and your stock is going down, there could be a sympathy push for your stock to come back in price. That's all. Right, wrong, or indifferent, to me, it doesn't matter. You will make the ultimate decision on how to trade your positions. You'll make that final call. It's not me. Alex said, kind of like ski slopes being green, blue, or black. There you go. The ones that are my favorite, Alex, are the ones that have no ski slopes and no snow. I'm not skiing, so we're good. My kids love it. Although one of them did freak out on black and they had to get help getting down, but they're brand new skier. Gwen said, where would you put this one? SPX is up. The stock is up today, but bearish on 5, and all other charts, I guess you mean 5 minutes. So, okay. If we look at the S&P 500, Gwen, right? So the S&P 500 has a bullish day and it's pulled back today. Okay, it's pulled back today. Bullish candle, but we're lower by 15 points than we were on yesterday's close. So the hollow candle can be confusing sometimes. Well, bearish on a 5-minute chart. So, okay. So what it sounds like, let me read it out one more time and then I'll explain it. So where would you put this one? SPX up. The stock is up today, but bearish on the 5-minute chart and all other charts, which is my day trade chart. Okay, so Gwen's trading off a 5-minute chart. So the initial decision comes from the daily chart, Gwen, of do I like this one or not? If I don't like what's on the day, I'm not trading what's on the intraday. In other words, unless I'm using the 882, we'll go back to SPY on this one for a moment, right? If I wanted to trade SPY, unless I'm using the 882, I ain't got a fib anywhere near it. So for me, there's no reason to take a trade on this one because there's nothing anywhere near that key level. But on the S&P 500, I've got an overall bullish move with a little bit of a pullback. If I can find, what I would rather see then, Gwen, is on my 5-minute, I'd rather see the stocks pull back a little bit to another key level and bounce, right? Which Lily was kind of the opposite. We had to move down from it, but we're getting that move down on the S&P. I followed the direction of the S&P. Lily was already in a overall bearish pattern. Look what happened from the earnings, right? They got decimated, crushed. Actually, we're going to redraw fibs at this point on it, but I will tonight in pop. Now that we got the gap down and a few more days in there. So I don't base the 5-minute and say because the daily was this, the 5-minute was different, so I make an adjustment in there. The daily still makes my decision. Do I want to take a trade or not? And that's on S&P. S&P is direction based. Right now, I've got to relate it back to a stock chart on the 5-minute, Gwen. And if we're bearish on our stock chart, do you want to take the trade? If the answer is yes, great. If we're bearish but pulling back to support and we bounce as the S&P is bouncing up, now the stars are aligning. Everything starts to come in alignment. Whereas they're not, way out in left field where everything is all over the place. You got one here, one there, one there. You're not all over the place. You've got some pattern associated with it. I hope that helps, Glenn. Let me know. So Brenda said, so would we say the S&P has moved down first and bouncing? So the next level down for the SPY is 554.08. Yeah, well, it is moving down. And when we say it's moving down, right now we're down $1.25. So we're flat-ish from where we were, right? We're kind of at that same level. We had a small pullback today. I wouldn't call it a bearish move on it, but we had a pullback. We had a gap down on the S&P, which gap down on the SPY, of course, and then a recovery, right? So where are we at now? Well, I don't know. It's 12:35. We got to wait and see what the market does before, we're going to move up, bounce, and I'm not ready to take a trade off of this with where we're at. In other words, I may not even get enough information today to say, maybe I should trade today. I may not have it. Boy, I took this whole thing in a much different direction. Actually, y'all did with your questions. Yes, but the next level down, Brendan, is 554.08. Correct. So if the market is rolling over and we get a failure at the 565 quarter on SPY, I would be all over this like white on rice. Man, I would be trading this sucker to the downside. But the overall pattern is still bullish. So I'm watching the candles down, 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 slightly sideways, a little up, down, down, a little bit bigger candle, down, sideways, 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 up, out. I'm out. That's it. But what if it keeps going? I don't care. I am not trying to hit the dang home run. I want to be on base. I want to be on base. My odds are better of getting a bigger paycheck if I get on base a lot of times, and every once in a while, I'm going to screw up and knock it out of the park. My dad taught me this when I was 16 years old. My parents were divorced, so we only saw my dad normally on a Sunday. He would pick us up. And he lived right near us, so we would see him during the week, but it would be more of hang out for a couple of minutes here and there. But anyway, we're bowling one day. I'm 16 years old. It's me and my two brothers are with us, and I have a 16-pound ball, and I throw that ball down the alley, and my dad looks at me and goes, "What are you trying to do?" Now remember, wise ass, I'm 16, right? What do you think I'm trying to do? I'm trying to get a strike. My dad said, "Okay, I understand that." He said, "How about this? If you get a 9 and you leave one of the corner pins, that's the 7 or the 10 pin for those of you that aren't unfamiliar with it. If you leave one of the corner pins, can you pick it up?" I said, "Most of the time I can." He said, "So here's what I want you to do. I want you to never, ever, ever try to get a strike again." And me with my dumb ass face, "Okay, Dad, what do you want me to get?" He said, "I want the 9. I said, "Why?" He said, "If you get a 9 and pick up the spare," he said, "you're bowling 190. What's your average right now?" 165. He goes, "Stop trying to get the damn strikes. Give up on getting a strike. Every once in a while, you're going to screw up and get it anyway. But stop shooting for the strike. Leave as little pins as you can up on the field, on the alley, and go from there." And it's no different in trading, guys. Don't go for the home run. The days that the home runs come, if you're in the market, the home run's going to get hit. But you're not trying for the home run. You're trying to get on base. The home run happens because you're in the right place at the right time and you're trading. That's when it happens. That's when the magic happens. True words. Gwen said, "Thanks. I do scalp, and this means I mostly do not set a stop, which can be very risky. I've now started to set stops more comfortably using the stock price since understanding better about it in pop." Okay, good. Excellent. Bowling analogy and trading. Thanks for this. You got it, Jim. Yeah, I mean, some of my best memories with Dad were sports related. I played. I was 13 years old, and I played. My dad owned a bar. I played on his softball team. My initiation was I was catcher. I had to be at the plate. The ball was coming in from second base. My dad was on third. He was running home, and I had to still have the ball in my hand after he touched home plate. And my father came in and took me out. Full grown ass man, excuse my French, and he took me out the way he hit me and knocked me over. I literally did like 3 tumbles into the back cage. That's how far back I went, right? And had the ball in my hand, and he had no choice. He had to let me play on the bar team. I was 13 years old playing on a men's bar league. Oh, God. All right. So I love the sports stuff. So today's trades, economic reports. Let's go take a quick look at what's happening today in the economic world. We'll go over to Forex Factory. We got nothing, honey, right? You got 10 o'clock was ISM. There's no others coming out. Tomorrow, there's no other reports, right? We got a couple of them. Wednesday's the big one, 2:30. We've talked about this the last time this came up. I don't know what the numbers are. Tripp gave it to us last week. There we go. Jim put it in 95.6% of no change in rate. 95.6, guys. It's not happening. It's not happening, right? And that's too bad. I could definitely use the rate drop. I'm getting ready to make a fairly good size investment in a bunch of real estate. So, but anyway, keep your eye on the Fed. You're going to see light volume on Wednesday. right up until that time frame, you're going to see whack potentially happening in that 2-2:30 time frame, depending on what the announcement is, what the forward-looking statement is, and any questions that get asked that throws, shade at Powell, causing him to, give an answer that may not be the most appreciated of them. All right, market review. Let's go look at the S&P 500. I mean, we've already talked a bunch about what's happening here, but guys, we're in a bullish bias. We are not true bull. But here's the key. Remember this. If you get nothing else, well, I mean, I'm having Sean go in today and strip this whole thing apart and run this into a bunch of little videos that we're going to put on TikToks and Instagrams. YouTube videos can come from this. There's a lot of great material inside of here today. So when you look at what's going on, and when I say the one thing to remember, we are right now in a bullish bias, but it's not what is called true bull, right? Let's see. So trying to remember who is, actually, let's go look at Lily. No, I was looking for maybe True Bear. All right. So we are in a true bullish bias right now on MasterCard. The 8 is on top, the green is in the middle, which is the 21, and the 55 is below. We just crossed up to it right now, right? And with the big moves that we've made lately to the upside, after the big moves down, it takes a bit of time for everything to react, right? So when we're looking at the S&P 500, we are in a bullish bias, but we are not in a true bullish bias. Come on. There we go. We're not in a true bullish bias. But as long as the 8 is not the lowest moving average, if we're down below the 21, never take a swing trade that way. I will never take a swing trade that way. I will take day trades, but I will take them aggressively, meaning I'll use less contracts. So if my 8 was down here, if this was my 8 down here, and this didn't exist, the pink line didn't exist in there, and I was going to take a trade here, instead of taking, let's say, 10 contracts, I would take 4 contracts, or 1 or 2, or whatever the number is. It doesn't matter. Less contracts and or less dollars in the trade. So right now to the downside, we've got a confluence at the 55.62, and we're looking at a resistance up here of the 57.87 level. We do not have a place to redraw from yet. We don't have enough pullback in here. This is a little bit of pull down, but it's certainly not enough. Not enough for me to say I'm going to draw a new line, a new fib from there. This fib is still okay for now, and we'll rely on the previous fib as needed. We've got fibs back here, and we'll use them as necessary. Tripp said the CME has the Fed target. Okay. No cut up 0.8% from last week. Talking heads on CME think the first cut is on, and CME think the first cut is on July 30th. Thank you for that, Tripp. Yep. And Jim said, reminder, possible low volume trading day till 2 o'clock on Wednesday with the Fed. Yep, exactly. And then from 2 to 2:30, you may see low volume as well coming into the press conference. Okay. So downside 55.62, upside 57.87. All right. So just keep those levels in mind, guys. But to me, the ideal setup here, we've had a nice run. I need a pullback. That was not a pullback on Thursday. I need a pullback, ideally back to the 55.62-ish, 55.65, 70. I don't care. Just give me a down more and bounce from there. And now what I'm doing is I'm setting up a healthy pattern of stair step. Right? That's what I want. I don't want this, because that pattern up falls like that. This pattern, the pullbacks, keep me going. These are resting periods. These are like your power-ups in a video game, right? These are your energy pills or whatever you want to call it. This here, you ran out of steam, and a lot of this was momentum-based, and then everybody just got crushed all at once. That was the GameStop type theorem, the way it worked. It's exactly how GameStop worked out. All right, so what do we got coming up? We got to check in this evening for Inner Circle. Core training is tonight at 8 p.m., and that is for power option plays. You're automatically registered for that. Mastermind group, Andrew, make sure that that's all set up, please, for tonight. Mastermind group is tomorrow. Trading You is coming up on the 12th. Wow, we got a lot of SPX coming up. I didn't realize we had that many. So we got 5 trainings coming up for SPX. With kick ass with SPX. Guys, this is the most hands-off trading you will ever do in your life, is what Brandon is going to teach you right there. Don't miss out on that. Power Hour Trading Coaches Playbook is on regular schedule, as is Pop, Covered Call, and E-Mini are all regular scheduled as well. All right, now our topic of the week, how to turn volatility into opportunity. right? And I kind of jumped ahead a little bit on what we did here. But guys, this volatility, that's where volatility is. So if you're an A trader, S&P 500 and the stock are in the same direction, my volatility is less because things are working the way they're supposed to. There's no friction in there, right? No gears are getting stuck anywhere. There's no friction inside of there. But when you get a market, when we talk about turning volatility into opportunity, when you get a market that is all over the place, right? And I know for a lot of traders, let me get rid of my crosshair. If we look at you know what, let me do it this way even. Let's get here. Let's go to template 1 where I don't have any moving average lines on there. Okay, now let me grab a drawing tool. So we had this fairly good, and we ran right up into here. And then we had a fairly straight move down, a couple of up candles, but it was a bearish move down. 2 days up, 4 days sideways, 5 days sideways, 2 days up, a couple of days down, a little bit of a bounce, big gap, and bounce again. Gave most of it back though. Gap down, gapped up and then moved down again. Opened up flat, big run, big gap down. I mean, we're all over the place. And only now we're starting to get some steadiness back into it again. Okay. And when you see this type of volatility in the market, when you see these gappings taking place in the market, you have got to be able to take advantage of the initial move. And what I mean by that on the initial move is on many days, your move happens within the first 5-minute candle of the day. So for me, right, I've done this, I've showed this many times before, but just, you know, for kicks and giggles, right? I have a 1, a 5, a 30-minute, and a daily chart. That's 30, right? You may have a 15, right? This is not an S, it's a 5, right? 5 is my primary. 1 is my tweak, right? I use my daily to make my decision of, am I even going to look at this intraday? I look at the 5-minute chart because it's my primary, and I'll use the 1 minute to help me tweak in there. The 30-minute is more to make sure that overall direction is holding steady, that we're not seeing something wacky happen, that the 30-minute is showing bullish, but my 1s and 5s are down. Wait, what's going on there? Right? Ideally, I want to see all 4 of these in the same direction. That goes back to the A trade, right? Where everything is moving in the same exact direction there. All right. So when you look at it here, if you look at, let's go back to Lily. All right. When you look at Lily on a 5-minute candle today, we did not have it right out of the gate. We didn't. We got that big gap down. Oh, but could I have traded the upside? No, I would not. I have no support here at all. There's nothing here that says, thought I had a line in my handwriting. There's nothing here that says take a trade. Nothing. Oh, but Rob, it lined up here. It doesn't matter. There's no fib line there. There's no horizontal line there. There's no 100-point level. There's no recent swing low or swing high. There's no moving at. There's nothing. There's a piano falling. It's on the 18th floor, and you think you could reach out the 18th window and grab it. No, it's going to hit the floor. Let it hit the dang floor. Right? Don't try to get into this or manipulate this early. Oh, but Rob, I miss out on so much that way. I understand, but you're not meant to take 20 trades in a day. Look, if you can get 1 or 2 decent trades in a day, if you can get 3 decent trades in a week, what do you need? I mean, if you think about it, if we go off of, not the one I wanted. Where's my pop one? Here we go. So if we go off of this, our worst profit was $624, right? It was our worst profit in this one. So let's do this. Let's take this and say it's not 625, right? Let's say instead it's $330, right? A little bit more than half. There's a reason I did that number, okay? And you don't do that every day. Let's say you could do that 3 days, right? That's $1,000 in a week, right? What if you have days, because we get them, These are all one contract trades, right? $51, $96. All right, we did 260 there, 85 there, 241, 521. Here's the volatility stepping in: 981, 350, 597, 927, 531. We are crushing it, right? $1,110. I'm sorry, I'm looking at the stop price. My bad. That was our exit price. Sorry. $1,000. We lost 600, 290, 624, 292, 1,600. So you got 117. You got $97, 175. So guys, what if this turns out that for you, you wind up with $200 on average for your trade? Why would I pick $200? Well, now I got to find the other spreadsheet. Because on average, we're at $242.36 right now on trade with Rob. That's our average trade of the 96 trades that we've taken, of the 200 plus that we've had candidates for, 270 or so candidates. We've taken just under 100. So a third of what we actually looked at each day. So if you could get $242 and you're able to do that 3 times a week, that's $726. If you could do that times 50 weeks, I'll give you 2 weeks off vacation. You deserve it. That's $36,300 doing one contract. Rob, I can't live on $36,300 a year. I understand. Some can, some can't. So let me ask you, what's the solution? If you can't live on $36,300, what's the solution? How do you fix that? If that's not enough for you, what do you do? More contracts, 2 contracts, more contracts, more contracts, 2 contracts, 2x. Yep. Bingo. But I need you to start with 1. And I'm not saying trade with Rob is the right trade for you. This is a trade. That's all it is. It's a trade. I'm not saying it's your trade. I'm not saying it's the trade. It's a trade. Right? But volatility brings great opportunity. Great opportunity. You just got to be willing to jump in and take it. Right? And you got to be patient grasshopper. When this happens, we gap down and we're not near anything. You got to be willing to step away and say, that was my only trade for today. I was hoping for a gap up and a fail. That was my only trade. Maybe I can't trade today. Right? And you're backing up. Now, I am then looking at my other candidates that would have maybe moved a little bit by now and maybe gotten closer to a fib line. I have alerts set on all my stocks every day. So if there's something that's going to happen on any stock I'm interested in, I've got that level or near that level. I always go just before it, set as an alarm. When said the other, thank you for your patience with me. The other day, I set up a bullish trade with all the stops because I had to leave. When I came back, the stock had surpassed the number I set. The condition was greater than or equal to 1. I think it's a point, whatever it is. I was confused as to why I wasn't in the trade since the condition was set with greater than or equal to, which should have triggered even if the stock gaps up. Yes, it should have triggered. What went wrong? Who is this with, Gwen? Is there a way to set the entry so the stock gaps up? I'm in anyway. Who's the broker? I would call the broker on it, Gwen. Yeah, no, who is the broker? Sorry. Is it TOS? Is it TradeStation? Yeah, I would call them and ask them what happened with that trade. They can look at it. You can get the broker on the phone. Oh man, my cleaning guys do this all the time. I keep a piece of paper on my board with phone numbers on it, and it's a sticky, and it falls off, and they throw it away. I don't have the TradeStation number here in front of me, but I'm assuming you have it. You've got the number. Okay, it's in my phone. Just give them a call and get the broker on the phone and say, hey, what happened here? I set this. What did I do wrong? And they'll walk you through it. They'll walk you through it. Yeah, call the broker as soon as you see it happen. That's exactly it, Brendan. Now, she did say she walked away, so she wasn't there, but yeah, she would always want to call them. All right, guys, we only have about 5 minutes for candidates, so go ahead and drop them in. Let me go back to a daily chart. Let me go and grab all symbols so we can see what pivots are. Let's go back to moving averages. Let's get rid of the pop field. Okay. Let's see. So first ones I see are gold, GLD. All right. Yeah, all over the place. So we've had some back and forth on gold right now. Big gap up today on it. Gold is a hedge play, Brenda. So you got to be careful when it comes to gold. Remember, it's trading worldwide. It's a hedge play worldwide. So people are throwing money there when they think the market is bad. So I don't do a lot with it. I do buy physical gold and physical silver, more silver than gold. I can't really bring a gold coin anywhere and buy the loaf of bread, but I can with a $20 silver piece, get bread if need be. Okay, is my thought process to it. So always have some at home. So if our dollar does crash, you at least have a marketable possession, right? So downside would be the 8 moving average. I'd love to see the move above the 307 bounce and you got 317.63 is the upside then. OKLO. Drop in any other candidates you guys have. Remember, this is your section, not mine. All right, let's see. Low price stock, which I don't normally trade. But let's see. We got a fib. We're going to draw from here to here. All right. Yeah, not impressed with it right now, Brenda. If it breaks to 23.26, there's no way we don't need fibbits in here. Yeah, we definitely need fibbits. So I'm going to put a negative 136 and a 118 in there. If it breaks to 23 and a quarter, look for 18 and a half as support. If it gets above the 27 and jingle, same thing, break above, retest, bounce, 31 is the next one. Gwen said, oh, no, never mind. Sorry. I thought it was I thought you were commenting on the one I was drawing. Sorry, I apologize. Let's see. Andres is asking for AMD. So same thing. It's in a bullish bias right now. Rank of 2 because we only rank 1s off of the 8 and the 21. Rank of 2, we've got a great blue zone in there of our 100-point level and our $100.84. Right, so we got a great blue zone inside of there. Break the 101, retest and bounce, Andres. Again, keep in mind earnings. I mean, I see it right here. I have it right on my tracking sheet, which I put away because I try to make the desk look neat before we go online. All right. So 5.6. I've got it right on my tracker. So I could see it right there on my sheet. But yeah, I like that move a lot, Andres. All right. Hope that helps. Citigroup. I have not. Who is that asked on this one? Dennis. I have not traded this in forever. This used to be a major covered call play for me. Covered call, diagonal spreads, big time. Let's see. I see a fib right in here. We have not violated the negative 618. If we look at this to this. So we've got $18. This is a bigger fib on the right. So we're going to draw the second one because it is a larger move. All right. Let's grab the fib again. Right. I didn't quite get it. Let's move it around. There we go. Now we got it. Whoa, what in the world? Come on. There we go. Okay. So 70 to 75. I don't need a fib in there, but we are getting up approaching that 882. So on this one, Dennis, the break above, the retest, and the bounce, I'd be careful. I'd probably start tightening my stop up at around that midpoint because we are at the $5.32. So we're right there for a fib. Barely. We don't need it, but barely don't need it. But it is the 882. So bounce up to 70 and a half. 75 is the next resistance. SE. This is where Gwen said, haven't traded it, but it comes up on my filters. Any impressions about it? Let's see. Yeah, if I don't have a fib on it, I haven't really I haven't looked at it in a long time, I guess, because I do have older fibs on it. So good move on it right now. Earnings coming up. I don't know. What do they do? It doesn't say. C Limited. Not really sure what that is. This current move might be bigger. It is bigger, but we don't have a pullback point yet. So this is what we're drawn off of. So 39 to 49 is 10 points. We don't need a fib in there. So Gwen, I don't mind this one. Give me the pullback to the 139 and the bounce. Today might have been the day for that. That move down, that gap down today and bounce might have been the day. We may not get another test, but it's not bad. Not at all. I hope that helps. What's the ticker symbol for Chase, Dennis? I don't know it. Apple. Let's wait for today's candle. Okay. We'll do. Oh, there is. Okay, there we go. So overall, we're bearish. Not true bear, but bear enough. I want to see the break of 197, Patty. Retest and fail, and then 190 is support. All right. Hope that helps. Cisco. All right. Let's see. Where's Rick when you need him? One of our members in Inner Circle has had Cisco worked for them, had their stock for a very, very long time. I mean, I don't see anything that I'm impressed with. I do see a move down on a fib here. Right? We did violate the negative 618. We've got another pullback here. It's not a great, well, we'll probably go with this as a swing top. That's a little bit better, I guess. Right. Yeah, so we're hitting up to the 764. Break the 59.5, retest and bounce. Let me see, 59.5, 62. $2.50. Yeah, it's just, Dennis, my thing is there's just not enough. There's not enough room here for me on this. I mean, I'm talking about where I may need to split this level in half, and there's only a $2.50 move. 62, yeah, $2.50. It's very tight. So, yeah, Tripp said I think Chase was bought by JP Morgan. Probably why I don't know the symbol. Post earnings play, Andreas, on which one? What one did you put in? AMD. Last one, guys. JP Morgan. We're a little bit over time. Sorry about that. So JP Morgan, we've got a really nice strong move to the downside with the fib. Oh, with Buffett stepping down. Yeah, Buffett, I mean, that's a valid point, guys. Buffett stepping down. And here's my thing. I hope my wife told me, she saw it on the news, and she had said it to me. My initial thing when I heard it is he's ill. I really hope not, because I never believed, just like Charlie Munger, I thought he'd be there until his last day. I never believed he would step down. I'm hoping he's not. I'm hoping it's just he wised up and said, I'm going to enjoy the last couple of years of my life without having to work. But I don't think he looks at it as work. I think he looks at it as helping. I really do. He sounded really rough at the meeting. Yeah, and how much of that is starting this billion-dollar entity that you ran forever? Your best friend was number 2. He's passed away, and now you're passing the reins. And it's not like the guy that's there is not well qualified. Guys, I own, just full disclosure, I own Berkshire Hathaway stock, B shares. Right? I couldn't buy a whole lot of A shares, B shares. And if I didn't think management was good, I wouldn't have kept those shares, because I know Buffett is old, and once Charlie went, but I feel confident in Berkshire Hathaway's management and what the job that Warren Buffett did. I'm confident in the stock, so I'm holding at this point. I'm probably not adding anytime soon. I want to see how they perform, but yeah. All right, there you have it, everybody. Listen, I hope you enjoyed it. I thought today was a great class. Really good questions, sound questions, brought up good points that were pertinent to what's going on in today's market. So hopefully you take a whole load of nuggets out of this. Realistically, I never say this, but go back and watch this one. You need to go back and watch it again and again. There's that much inside of here. Those that are experienced traders, they know. They saw the 25 plus things that are in there to pull out. Those that are newer, you may have only found 3 or 4 things that were valuable. Go back and watch it. I'm telling you, there's a lot in there. All right, everybody. Have a great rest of your day, and I will see you all on the next update. Take care, everyone. See you soon.